This video is not financial advice, for entertainment only. The much-anticipated Airbnb Nasdaq ABNB initial public offering IPO is set to launch this Thursday, December 10, 2020. It could be one of the hottest initial public offerings of the year. How Airbnb stacks up against online travel operators and lodging leaders. Airbnb does not actually own any properties. Its online platform connects property owners around the world, with renters looking for an alternative to the hotel experience. It has 5.6 million listings in 100,000 cities in 220 countries and regions. With more than half of its revenue from outside the US, those listings include 3,500 castles, 2,600 tree houses, and 140 igloos, as well as rooms and houses. In 2017, Airbnb paid $200 million for luxury retreats, now Airbnb Luxe, which has rentals for as much as a few $1,000s a night. The company skews younger than sites geared toward vacation rentals. Millennials account for the bulk of its business, and its average daily rate is around $130 a night. The company has become synonymous with the home sharing and rental concept that it pioneered more than a decade ago. It's the Apple of travel. Like Apple, Airbnb's brand-building approach and design of its app have helped foster a sense of community and connection among users. During the pandemic, risk-averse travelers have favored private homes over hotels, and that has enabled Airbnb to rebound more quickly than traditional lodging companies. Airbnb reported an after-tax profit of $219 million in the third quarter, compared with a loss of $576 million in the second quarter. With its asset-light business model and global presence, the company is poised to benefit from a rebound in travel, while the current quarter is expected to be weak amid a worldwide resurgence of COVID-19. Investors are looking toward 2021 and 2022, when the world should normalize with widespread vaccinations. The proposed market value of Airbnb, about $40 billion. At the top of the proposed pricing range of $56 to $60 a share, isn't cheap based on traditional financial measures like earnings and sales. But its valuation looks reasonable given the company's market position, scarcity value, brand power, and global opportunity at a time when investors regularly value exciting growth companies at considerably more than 10 times annual sales. Its IPO, which is due to price on Wednesday, looks digestible at about $4 billion. At the top of the pricing range and an offering of roughly 57 million shares. That's less than 10% of the 601 million shares outstanding. Another 40 million shares are linked to deep-in-the-money options and soon-to-vest restricted stock. All this should prompt strong demand, and Airbnb's share price could end the week appreciably above $60. After the listing, Airbnb will continue to reinvest its cash flow and does not intend to pay investors a dividend for the time being. The company plans to use the IPO proceeds for general corporate purposes, including working capital, operating expenses, and capital expenditures. Airbnb is now a leaner, better managed business. Sales and marketing expenses are down by about $1 billion annualized since the pandemic. After the IPO, it is expected to have about $4 billion in net cash. Its well-timed IPO could be a hit, forcing investors to decide whether they want to pay up for one of the best travel franchises. At the top of the pricing range of $56 to $60 a share, Airbnb would be valued at more than 7 times estimated 2021 sales of $4.3 billion. Revenue is expected to total $3.3 billion this year, down 31% from 2019. But will rise 30% in 2021 and another 40% to $6 billion in 2022. Analyst Cordwell has already begun coverage, with an overweight rating and a price target of $75 a share. He projects about $1 billion of earnings before interest, taxes, depreciation, and amortization. For 2023, he sees earnings of 40 cents a share. The IPO should benefit from what Cordwell calls a scarcity of secular growth stories in online travel. Scott Galloway, a New York University marketing professor and tech entrepreneur, has said that Airbnb would be worth over $100 billion by the end of 2022, which would translate into a price of over $150 a share. If Airbnb trades like a story stock, and it will, we could see Tesla-like multiples of 15 times revenues. Whether you decide to buy the Airbnb IPO ultimately comes down to your own risk appetite and investing horizon. 7 reasons to reconsider buying Airbnb IPO. 1. Average investors can't buy at the initial price. 2. IPOs may underperform benchmarks. 3. Emotion can trump reasoning. 4. Valuations still matter. 5. IPOs have little real-world valuations. 6. Research is important. 7. Prices may tumble after the lockup period. IPOs have always been available to the wealthiest customers of the leading brokerage firms. That's great if you're wealthy. For the average investor, you should know hot IPOs can see their share prices rise sharply in the first few days and weeks of trading, sending valuations to outsize levels, with high price-earnings ratios. You should avoid the temptation to get caught up in the excitement of the moment. It may be better to wait until after the IPO, when price of the stock stabilizes, or even drops as the excitement dies down. Also, make sure you don't get carried away with IPO investments. Limit participation to no more than 10% of your portfolio. That way, if the IPO goes against you, the loss won't be catastrophic. This is my analysis for Airbnb today. Please subscribe below in order to receive my daily analysis and findings. Thanks for watching.